Peoplender and its P2P platform Fundastic is aiming to change how SMEs fund their businesses. We talked to CEO Christine Ng about the nuts and bolts of the business, returns compared with traditional options, and getting investors to invest outside the box. Peoplender runs Fundastic, which is a P2P lending site that caters specifically to SMEs. You know, for those unfamiliar with your model, can you sort of in a nutshell tell us what the platform kind of does? Because you are not a bank per se, but you are not funding startups, so you're not a fund either. So how does it work?
Okay, basically peer-to-peer financing or peer-to-peer lending, or what is called P2P in short, it's a form of web-based credit crowdfunding. So what the platform does is that it is the middle party that allows for SMEs to submit an application. We will evaluate on their credit worthiness, and if we find that they are suitable to be hosted on our site, we'll put it on our site. And that's where the matchmaking happens. Investors who are registered and verified members with the platform would be able to look into this note hostings. You know, the debt financing are called notes. And they'll be able to look into that, read about it, and if they find affinity in it, then invest into it. So in a nutshell, if I were to put it in very simplistic terms that the mass can understand, we are like the Grab of the financial industry. The Grab platform of the financial industry, whereby we offer people who need funds to be able to raise funding from the general public who has some money and willing to invest in them in small amounts to earn interest on a monthly basis.
When I was looking at your site, that's the thing I noticed, and even in your FAQs, you did say that it's just a simple matter of picking what you want, putting it in the cart, and putting, paying it out. And you say that people can get into it for as little as 50 ringgit, right?
Yes.
But even at 50 ringgit, what kind of returns are you giving in order for people to even want to part with 50 ringgit?
50 ringgit is actually the minimum investment amount, and we believe that why we want to start with such a low entry barrier is because the industry is new. So to build trust and acceptance, we need to make sure that the retail investors are comfortable with us. So that's why we start with a very low entry barrier. But in terms of the percentage of returns, they are getting anything that ranges from 8% flat to about 13.28% per annum. And on an average is about 11%. And this is actually very good returns because right now, if you look at the market in terms of investment vehicles that are available for the masses, you have the equity, the Bursa, and then the bonds, and of course the unit trust. And although all these three vehicles are still viable, but because of the complexity, the returns for the past few years has been quite not as fantastic as we want it to be. So this offers an alternative funding where very new investors, the young people, can actually start looking into and start learning about investing without burning a huge hole in the pocket, because you only put in small amounts and build a portfolio over like 2-3 months. We always tell the youngsters, don't put all your eggs into one basket. Build a portfolio of at least 100 diversified notes, and then after that only you cherry pick. And the funding tenor is anything ranging from 3 months to 36 months, right? And every month you get back your repayments. So your risk reduces every month and you're able to reinvest. Therefore, it's very easy for everybody to build a nest egg over just 3 years.
But on the SME side, how do you make sure what businesses pass muster? Because the reason you started a platform like this was because some of these businesses are small, all micro. They either don't keep their records well, or it's lost, or they're just new or starting up. So how do you vet to make sure that even on Lazada, you must vet to make sure your blender is not a mouse?
One of the very lucky things that Malaysia has, it's a very I would say a very rich data in terms of what the banks has fed to the central banks, and we have very rich bureau data that is highly accurate. Yeah, because if the banks were to feed wrong data to Bank Negara, they'll be heavily fined. And this is what we are very fortunate to be able to leverage on. And we believe it is stronger than even looking at financials. Because you rightfully put it, the small and micro SMEs, either their financials are outdated, or it might not be accurate, or they don't keep records. And if they do not keep records, but their business is growing, and they need funding, where do they go? And this is precisely why SC actually came out with P2P financing. It's an alternative platform that allows SMEs to raise funds rather than go shadow banking if the traditional lenders or the banks are not lending to them.
How many of the businesses on your platform have gone bust?
Okay, so far, none of the business have gone bust, but if you're talking about default rates,
They can't
that
pay
is
back.
something, they can't pay back. That is something that we cannot avoid, In fact, if the platform has zero default, there really is something wrong with our model already. Currently, our default, it is 8 default out of 375 notes that we've funded. And that makes it about 2%. And in terms of the amount is about 538,000 out of 31 million that we have funded. And that is also less than about 2%. Therefore, I think the model is pretty viable. And in terms of managing this, we are very stringent in the notes that we approve and we host.